Good morning, sir. My name is Bharti More. I'm studying in MBA first year in SAS Institute of Management Studies in research. Today, I'm explaining my presentation. My presentation subject is accounting for investment. There is a definition. Investments, assets held by an enterprises for earning income by way evidence, interest and rentals of for capital appreciation or for other benefits to the investing enterprises. Assets held in stock in trade are not investment. There is a two investment, current investment and long-term investment. Current investment means investment that is by its nature readily readily reachable and is interested to be held for not more than 1 year from the date on which such investment is made. Long-term investment means investment other than a current investment. Content is investment property. Investment is a land or building that are not entered to the occupied subsequently for use by or the operation of the investment enterprises. Fair value amount for which an asset could be exchanged between a knowledgeable with willing buyers and buyer and knowledgeable right within seller in an arm's length transaction under the appropriate the circumstances. Market value or net realized value provide evidence of fair value. Market value amount of obtained from the sale of the investment in an open market. Net of expenses necessary to incurred on or before disposal. Classification of investment. There is 4 classification: government of trust securities, shares, debentures of bonds, investment properties, other specification natures. Second is cost of investment. The cost of investment should include acquisitions charges such as brokerage fees and duties. Concept of chart investment. Investment is two concept. Investment with fixed interest and returns. Second is investment without fixed interest and returns or returns. And investment within fixed interest and divided. There is one extra debentures, percussion shares, government's bond, and investment without fixed interest or returns, or ordinary shares. Investment without fixed asset. Accounting process is example, transaction and accounting entries. First is cost of investment purchase. That means cost plus other occupations cost. Example, brokerage fees, commission and stamp duty. Accounting entries is debit investment means capital and nominal, capital plus nominal, credit by the bank. Receipt of dividend. Receipt of dividend. Transaction is receipt on dividend. Accounting entries is debit by the bank, credit investment income. Third is sale of investment proceed other selling expenses. Example, brokerage fees, commissions and stamp duty. Accounting entries debit for the bank, credit for the investment. That is a capital and nominal. Fourth is profit on sales or investment. Reverse the entries or for a loss on the sales of investment. Accounting entries debit of investment, that means capital, and credit profit and loss. Transfer of income to the profit and loss account at the end of the accounting year. Accounting entries, investment income, credit by the profit and loss. Accounting for a bonus issue and right issue. Bonus issue is bonus issue is an issue of ordinary shares out of a company reserved to its shareholders' interest of a cash dividend. No double no double entry would no double entry would be made in the books of the shareholders. The value of the issue should be entered on the debit side of the nominal column of investment account on a memorandum basis only. Second is right issue. Right issue is an issue of the rights of rights to the existing shareholders to subscribe ordinary shares at a price lower than market value. There are three ways shareholders holding the rights can respond. First is renounce the rights. Second is renounce rights. It's no entry. Selling the rights. Selling rights accounting entries debit bank and credit invest account within the sale of produce. Proceed. Third is take up the rights. Debit is investment account, that means capital column, and credit by the bank within the price paid by the shares. Fourth is buy extra rights from other shareholders and take. Debit investment capital, credit by the bank. No entry should be made in the nominal column within the price paid for the extra rights. Second is entry debit investment and credit to the bank within the price paid for the shares. Profit or loss on the disposal of investment. Profit or loss on disposal of investment is calculated by the equation. The formula is profit of disposal is equal to sell proceed minus cost of investment sold, or selling price minus selling expenses minus cost of investment sold. That is the profit and loss of disposal of investment formula. Cost of investment. There are two methods for calculation the cost of investment. First is method arrange method with head. Sorry. And second is first in first out method. With head arrange method and first in first out method. Using with an arrange method is using this method, the cost of investment sold is determined by the average of investment held. And first in first out method is using by the method, the cost of investment sold is determined by the unit price of investment, that is a purchase air list. Then investment with a fixed interest then can be present preference shares, preference shares, debentures, and government stock. Point is investment income is distributed once or twice a year at given dates. Second is a company is only entitled to income from an investment for the exact period that the investment is held. Then if the equations occurs between two payments dates, either the seller or the buyers will have the rights of receive interest. However, some interest belong to the seller and some belong to the buyer. Adjustment are to be made for the acquired income. Thank you so much. Uh, Listening my PPT.